Hi, everyone. Welcome to our Lessors Risk Insurance webinar. I will be your presenter today. I'm Michelle Belden, the commercial underwriter here at CID Insurance. Also on the call with us is Jacob Cole, our marketing coordinator, and he'll be here to help facilitate things in the background for us. And then as well is our CEO, Ane Augustini, is also on the line as well, so she will be able to answer any questions, or I will throughout the presentation. Okay, for those of you who haven't attended a webinar with CID before, just want to go over a few things, just so you know what to expect. So everybody is muted. But if you have a question, feel free to post that in the chat, and we'll make sure that it gets answered throughout the webinar. So feel free to post any questions that you have, and we'll make sure those get answered for you. And then again, at the end of the at the end of the presentation, there will be a survey. So, if you could give us some feedback, if there's certain things that you guys would like to see a webinar on, anything like that, that's greatly appreciated. So, we can better model things and help you guys out to write more business. All right. So let's talk about what we're going to explore today in the webinar. So we're going to talk about identifying different types of commercial buildings and the types of coverages that they need. We're also going to go over a lot of changes that we're seeing. I'm sure, I'm not the only one seeing those changes. Everybody's feeling the changes across the board. So we'll go over some of those changes that I've been seeing and what I've been hearing from other retail agents as well. And then we're going to talk about the underwriting guidelines. And in this webinar, we're actually going to go through actual example submissions. So we have a few examples where we'll go over the submission and what my process is when I'm reviewing the risk in order to get you guys a quote. And then lastly, we'll go over all the documentation that would be needed to get a quote. All right. Before we start, let's just get a baseline of what, an LRO is, or a lessor's risk. If I say LRO throughout the presentation, I'm referring to a lessor's risk. I know some people sometimes don't know the abbreviation, so just to let you know, I will probably say that because lessor's risk is a mouthful. So for a definition of a lessor's risk is we're providing either building or property coverage and or liability coverage for a building owner who's leasing out their building. So they can either lease out the entire building to one tenant, multiple tenants, or maybe they occupy maybe like 10% of the building for like an office space to manage their property. As long as they're leasing out the majority of their building, we would consider that a lessor's risk. And so again, this is providing coverage for the landlord, not for the tenant. So this is for the building owner and whomever they're leasing out that building to, not for the individual tenant that's actually occupying the building. All right. So different types of commercial buildings, just to, think about when you see them. I mean, we drive past them every day for the most part. So you have your professional buildings. Those are going to be your office buildings with like lawyers and computer consultants and things like that. Your medical offices, those are going to be your professional type buildings. And then you have your industrial buildings, which are generally going to be your like warehouses with either light manufacturing risks. So, maybe like a garage door manufacturer or a contractor who has his office and keeps his storage there. Those are the types of businesses you would most likely see in an industrial type building. Then your retail strip malls, all your mercantile businesses, your restaurants, so anything like that. I mean, this can also include, big shopping centers as well, and malls. Those would be your type of retail mall side of things. And then your mixed use buildings. Some people have different definitions of what a mixed-use building is. For me, what I consider to be a mixed-use building is when it's occupied by both commercial and residential tenants. So maybe on the bottom floor, there's a restaurant and like a cell phone store, and then the above 2 floors are rented to have 4 apartment units. To me, that is a mixed-use building. I know some people consider a mixed-use building when there's like, maybe there's a mercantile tenant, and then there's an office, and then there's a warehouse. And to me, that's not a mixed-use building. That's still just a commercial building as a whole with no residential units. So that's the distinct definition. For me, a mixed-use building has residential units in it, whether that's one or, more than one. All right, so some industry changes that I've been seeing with the submissions I've been getting from you guys and other retail agents out there is, I've been seeing a lot of people getting off risk because they're no longer writing a specific class, or maybe in a certain state, they're no longer writing that specific class. So I've been seeing that, a lot of those. I've been seeing a lot of people are tightening up on what tenant occupancies they're willing to consider. So, for example, if, maybe something had a smoke shop in it, and that used to be acceptable with the current carrier they're with, but now they've decided, okay, we don't want to write those tenants anymore, so people are getting non-renewals for that reason as well. So I've been seeing a lot of those type of non-renewals for submissions coming to me. Risk location, especially here in California, there's, brush and wildfire mapping occurring up and down the state. So we do brush and wildfire map because we have to with our carriers. So if it is in a high or very high wildfire area, we most likely will not be an option for the property, but we could definitely help you out on the GL side of things. But again, if you're not sure, feel free to send their submission over. You can send the address over to me, and I can run the address on our side of things to see if it's something that would qualify with any of our markets. A lot of things I've been seeing recently, especially with farmers agents, is the building age, and farmers no longer writing things built prior to 1925, regardless if the building's been fully gutted and updated. If that building age is still 1925 or prior, then people are getting off of it, and that's just farmers. I know other carriers are changing their guidelines on that side of things. We do have numerous markets that don't have a building age requirement, so we would be fine there with the older buildings. I've quoted some things as early as the late 1800s, so I get a lot of submissions from the San Francisco area, so a lot of those are much older buildings, and it's definitely something we can take a look at. Not a problem. If they have the updates, it's great, because then that helps with where we can place coverage for them. If they haven't had the updates, then we'd be looking at basic ACV most likely, and that can sometimes limit things on where we can go. But again, we don't have necessarily a building age restriction across the board. Some of our markets do, and some of them don't. I've been seeing a lot of carriers now are starting to run crime scores. So some people, if you're in certain areas and the crime score is really high, people are starting to get off of those risks as well. So some of our markets require us to run crime scores, some of them do not. So it just depends on the risk. And then other things to know about other changes for those mixed use buildings, the ones with the habitational units in them. For us, any mixed use building we have for the most part would probably they would have some sort of habitability exclusion. I've been seeing a lot of that. A lot of our markets have added that on because of the claims they've been seeing, so they needed to add that habitability exclusion on. We have some markets on the admitted side of things that are still able to include habitability, so there's no exclusion there on that side of things. Your non-admitted markets are the ones where you're going to see this habitability exclusion. And then we have some markets that are able to offer like a habitability sublimit. So depending on the risk and where we can place it, we'll try to work around that. But that is something to note because it's definitely been coming up a lot more. All right. And then just a couple other things I want to note. So, sometimes we're having to split the coverages because of these changes, because one market only wants part of it and the other market will do that. So, we would all prefer to write a package, but sometimes it's coming down to, okay, we have to put the GL with one carrier and the property with another. Again, if we can only help you with one line of coverage, we'll definitely let you know. So that way, you have the ability, so that we're not just waiting for a package quote to come in and then we only send you a GL and you're like, well, where's the property? We need that too. Because especially on LROs, property is an important coverage for them to have. So we'll definitely let you know on what lines of coverage we can help you with so you can continue to shop the risk with your other wholesalers and available markets. And then I do want to talk for my agents that are in Colorado and Texas, especially those two states. I do want to say we don't have the greatest ability to write HAB-related risk, whether it's an LRO, an apartment, or a mixed-use building. We're just limited in those states based on the coverage, based on the carriers that we have there and the limits we're able to write with them. And then the wind and hail guidelines come into effect. Some carriers only allow us to write there if we exclude wind and hail altogether. Others have kind of high deductibles, what I've been hearing. So, and we're not in any market for any sort of like wind buyback. So, definitely something I would let you know up front with if it's something we'd be able to consider in those states. Those are two of my predominant outside of California states that I get a lot of these types of submissions where I kind of have to give the bad news, though I know you guys that are in those states are kind of used to that response because when I say it to you, you go, yeah, that's nothing new. All right.
Did you see the question that's there for you?
Yes, I do see a question. So it says, I see a lot more vacancies since COVID. Do you have markets for vacant buildings? So depending on the vacancy rate, it could potentially be still be a lessor's risk. If not, it would go into our vacant buildings program, which is done by my coworker, Teresa. So really knowing that what the percentage of vacancy is in the building will determine if it's something I would be working on or if it's something my coworker, Teresa, would be working on. But yes, we do have markets that will consider partially occupied buildings or fully vacant buildings. All right. So we're just going to go over some coverages that, as for a lessor's risk, what you should be looking for and would want to be offering your clients. So the property coverage, that's going to be your main coverage, obviously, to go over your building coverage. If maybe your building owner has like a little bit BPP, maybe they have like a picnic table out front or something. So we would want some BPP for that. And also your business income, which is your annual loss of rent. So that's an important coverage to have. Generally, if I don't see that on a submission, I will reach out to you to ask you because that's a coverage that they should have on the property side of things. We can also include building ordinances coverages A, B, and C, as long as we're able to offer special form. That's an available coverage. Equipment breakdown is available. Most of our carriers have some sort of property enhancement endorsement that will include certain coverages. Generally speaking, you'll see like water damage and stuff on there, generally for like $25,000. If you need a higher limit, depending on the carrier, it's definitely something we could look at adding on as well for its own sublimit. And then the general liability. A lot of people will come and just say they want the building coverage because they don't think that the building owner has a GL exposure because their tenant has GL coverage, which while that may be the case, say somebody tripped and falls in the parking lot and they sue the tenant, they can also sue the building owner since the tenant doesn't own the building, so they can pull in multiple people into that lawsuit. So it is important on the LRO side of things for them to have GL as well. And then some people will only take GL and not property because, they don't have a loan on the policy and they're not concerned about insuring the building. As a whole, I would suggest and recommend that they do both GL and property so they have a full package policy. But at the end of the day, it's the choice of the insured what coverages they want. And we can also look at adding on hired and non-owned auto onto the GL side of things as well. All right. Okay, so we're going to dive into some of the examples that we have. So this first example is an industrial building where it's owned in an individual's name. So for this instance, we'll call him Mark Smith. And then they have an auto repair business, and we'll call that Express Auto LLC. So Mark owns the building in his individual name, and then his business is an LLC. While he is the owner of the LLC, this is still considered an LRO because they are two separate entities. He separated him owning the building versus his business owning the building. So we get a lot of these where people get confused where they're supposed to have coverage, where they think the coverage for the building goes on to the insured's business operations and not them as an individual. So that's why it's always important to find out who's the title on the building. Is it owned in their individual name, maybe a separate corporation from the business, because that determines if it truly is an LRO exposure. So we want to be separating those exposures, even though him owning the building himself 100% and owns that LLC 100% himself, they are still two separate entities, so we have to separate the exposure there. We don't want to put the building coverage on there because the business is not the building owner. His individual, as an individual, is the building owner. All right, so I hope that makes sense to everybody. And then I just want to go over, just when I'm reviewing a submission, what I'm looking at and the information and how it pertains to like how I can determine what coverages we can offer and what markets I can go to. So in this instance, it's a single-story building, 1,500 square feet, joisted masonry, built in 1965. It's really important that I have all of the COPE information because that does determine, again, market I can go to. So sometimes, I might get the square footage and the building construction type, but I won't get the year built. So I'd have to go back to you to get that information. And then as well as knowing the updates. So in this instance, we have the roof and the wiring are updated. They have original galvanized plumbing, and there's no heating there. Okay, so I wouldn't be looking for any sort of heating updates since I obviously know there's no heating in the building. But with the updates, I'm wanting to know has the building been fully updated? Because we need to know that information, because especially when the buildings get older, that determines if we're able to offer special form, if we're able to, or would have to offer basic ACV. Also, if you've worked with me in the past, you'll pretty typical question that I do ask you is what type of plumbing there is, because the type of plumbing does also dictate the coverages we can offer. So in this instance, with this one having galvanized plumbing, unfortunately, I would only be able to offer basic ACV because galvanized plumbing, that's what my markets are able to consider when it's galvanized plumbing. Now, had it been copper or PVC plumbing, then we could look at offering special form, depending on the update information and the year built. And then just to go over some life safety things. So in this instance, they have fire extinguishers present, but they don't have smoke detectors. So we would most likely have to have an LRO inspected. So those are things we would be looking for, that they have fire extinguishers present and that they are currently tagged and properly mounted. It's real easy to get on an annual contract with people. We have here in our office once a year, the guy comes in. I half the time don't even realize he's there. He checks the fire extinguishers, make sure they're still good, and then currently tags them and make sure that they're in their appropriate spot. It's as simple as that, getting on a little annual contract with a company to come out and service your fire extinguishers. While smoke detectors, a lot of people don't think that they're needed in commercial buildings. That people automatically assume that it's just a residential thing. It's obviously helpful to have them in any type of building, because it's another alert to help people get out of the building quicker, to know there's an issue. So our carriers do require there to be smoke detectors present. So if they're not there, that is something we would ask on a loss control inspection to be put in. So that's that on that side of things, as far as what I'm looking at when I'm reviewing the submission before I can determine where I can go to market, and then obviously determining what coverages we need. So in this instance, they're wanting GL, building coverage, and business income, which is good, because at least for this example, with it being a owner-occupied LRO with their business, they're understanding that they still have a GL exposure as the building owner versus a GL exposure from their business operations.
Michelle, there's one more question for you.
All right. So we have something about equipment breakdown. Is it a bit like a warranty, or there are typical certain types of peril? Equipment breakdown, it kind of, for the most part, most carriers use a similar across the board.
One of the things that I typically find, Michelle, with equipment breakdown is that that there's a lot of confusion with insureds and sometimes insurance brokers in reference to what it really covers. It's intended to cover accidental breakdown of equipment, machinery, that kind of thing, that's insured. And there are a number of exclusions tied to it. So it's really, a lot of times it's not for wear and tear or someone who doesn't maintain their equipment and it just breaks down as a result of not being maintained. So it's really important to discuss that with your insured if they're going to purchase equipment breakdown coverage.
Yes, and especially the wear and tear part of things. And also, if I can always pull the specific form. Most carriers use a similar form, so I can always pull the specific equipment breakdown form for on a quote, so you can see all the exclusions. Like I said, for the most part, I feel like across the board, there's pretty similar form with most carriers, but we need. Some carriers, might specifically exclude something because they've seen a type of loss, so they decided to add an extra exclusion on there. So I can always pull that form so you can review it in full. And then if you have any other specific questions about it, I'm definitely happy to, answer that or get further clarification from the carrier. But what Anae said is correct. It's not the wear and tear time of things or, poor maintenance of the items. It is for those accidental things. That's what we'd be looking for. Let's see, we have one other question about the smoke detectors. Yes, when we are looking for smoke detectors installed, they do not have to be hardwired. People automatically assume that, and they're like, that's going to cost us thousands of dollars to get that done. No, you can just go to Home Depot or buy them off of Amazon, just your battery-operated ones. That's totally fine with us. No issue there, just as long as they have them in place in the building. That's all that we're asking. So battery-operated is no issue for us. All right. I know we talked a little bit about vacancies already, but we will do an example with a vacancies. So this one, for example, is a retail strip mall. So they have some mercantile tenants, some restaurant tenants, and then they have some vacant units that they're looking to lease out. So in this instance, we have two single-story buildings. So one's 2,000 square feet, one's 10,000. They're frame buildings built in 2003. So we have a 15% vacancy rate. So what we would want to know is specifically where that vacancy is. Is it in the 2,000 square foot building, in the 10,000 square foot building, or is it in both? Because there's certain units in both that are vacant. It's helpful to know that information so that way when we're rating the buildings, I'm rating them correctly. And because some carriers, depending on how high the vacancy rate is, we have to rate for both the occupied portion and the vacant portion. So knowing that information and having a breakdown of where those vacancies are, if it's a multi-location or a multi-building location, knowing that information is very helpful because then I can be able to split out what where the vacancy would need to go if it needs to be specifically rated for. With this one, as part of their lease agreement from the building owner, they require their tenant to provide them COIs, meaning that the tenant needs to have coverage in place, and not only have coverage in place, they need to be listing their landlord as AI on the policy. For everything on an LRO side of things, your building owner should always be requesting that information from the tenant to ensure that they have coverage in place for themselves and are naming their building owner as on their policy as well. That is something that we would want to be looking for. Some of our carriers specifically ask us to provide the COIs to them, within a certain number of days of binding an account. Other ones just want the confirmation that they are. Again, if we were to have this inspected, that would be a question that we would ask the inspector to ask whomever they're doing the inspection with to confirm that they are receiving those COIs and making sure they are named on their policy, because that is an important thing. Important backstop for the building owner to have in place with their tenants, along with obviously their lease agreement. In this instance, this building is 100% sprinklered with a fire alarm, and there's fire extinguishers. And they have the necessary maintenance contract. So when the building's sprinklered, you need to have an annual sprinkler test and an annual fire alarm test to make sure those are in good working order, just like you do on the fire extinguisher side of things. So those putting a contract in place to make sure you have that annual. Some people do them sometimes even biannual to make sure those in place, because you want to make sure that those life safety measures are operational in the event of an emergency. So if say a restaurant, there's a grease fire and the building caught on fire and it was sprinklered, we would want the sprinklers to go off. So that's why it's important for them to have those tests and make sure that they are operational. Generally, if you fail a test, you have to make those corrections, and then you'll turn around and have them come out and do that again to make sure you pass. So that is an important thing to have if your building is sprinklered or has a fire alarm, depending on what life safety measures are in place and would require a contract. Just like, on the restaurant side of things with tenants for those restaurants, they have to have their hood and ducts cleaned, their grease traps cleaned, all of that. We'd be wanting all of that because that is helping prevent a potential loss from occurring. So it's important that all of those necessary maintenance agreements are in place. And in this case, we're offering them GL, hired and owned auto, building coverage, business income, building ordinance equipment breakdown. So they pretty much want a whole gambit. They want the fullest policy they can get themselves. So that's what they're looking for on this one. All right. Okay. So on that last example that I just used, that one, how I said there was two buildings there. So when we have multi-building locations or risks with multiple locations, I need a breakdown of those buildings and of the coverages that they offer or are looking for, I should say. So in this instance, we would want a statement of values or some form of a breakdown. It doesn't necessarily have to look like this. So if you ever hear me refer to an SOV, that is a statement of values. So this breaks down the building and can break it down by the number of units, the square footage, the property limits they're looking for. So this example is just one that kind of shows what we would be looking for. Again, like I said, it's used for multi-building complexes or locations. Generally, if you have 2 to 3 buildings, people will just break the information down on the Accord 140 and not send this to me, which is totally fine. I don't need that. some people find it redundant filling out the 140 so many times and would rather just, throw a real quick Excel spreadsheet together with the same information. At the end of the day, as long as I have a breakdown one way or the other, I don't really care how the information comes to me, as long as it's something I can figure out clearly what goes with what. And then again, we can also use this to add on if there's any additional property components that need to be included. So say maybe there's like an enclosed trash container. So, that's not attached to the building and they want coverage for that in case, maybe somebody's car ran into it or something and caused damage to it. So things like that. If there's, detached garage or carport or something like that, and they want coverages for that. So pretty much everything they're looking for coverage on, we want to know what it is if it's not attached to the building. If, there's a roll-up garage that's attached to the building, then that would just be included in your overall building limit. But if it is a separate structure, then we would want to make sure that we are including that if they are looking to intend there to be coverage for that specific structure. All right. And then I do want to say we also need statement of values on the side of things because some people think that like for blanket coverage that they don't need to provide a breakdown of each building. The carrier is still looking, even if they are able to offer blanket coverage, they're still wanting to know the breakdown per building and or location. So this information is helpful even on the side of things where maybe we're offering them blanket coverage. All right, so our next example is a mixed use LRO. So this, again, my definition of mixed use being mercantile tenants. We got some mercantile tenants on the bottom and we have some residential tenants on the top couple floors. So in my example, this one's a 3-story building, 6,000 square feet, frame building built in 1929. So it was fully gutted and remodeled in 2015. So that doesn't change the year built because they only brought it down to the studs. If they had demolished the building and then rebuilt from there, then your new year built would be 2015. But since they only brought it down to the studs to totally gut it and bring it up to code, your year built would still be 1929, which with certain carriers, as we talked about earlier, could pose an issue because the building is older. So again, that they fully gutted it and remodeled it, great, makes it easier to offer them special form replacement costs. Again, for this one, because there's commercial and residential, they have both fire extinguishers and smoke detectors present. The necessary maintenance contracts are in place for those things. And again, this one is looking for all the coverages. Generally speaking, the sewer backup coverage, I see a lot of people ask for it more on the residential side of things than the commercial side of tenants. But, it's a good coverage to have regardless if you have it on either a residential building that's either a fully residential building, partially residential building, or a fully commercial building. It's a good coverage that I recommend be added on. Some people, are looking for the bare minimum to cover the building, and that's that, and they're fine with that. But for those other ones that are, looking to beef up their policy and make it the best that they can, that's definitely a coverage I would say you could recommend to them to add on as well. So on the mixed use side of things, when we're rating these policies, if you've worked with me before, you've probably gotten an email where it said, can I get this commercial square footage versus the residential square footage? And then I also have to know the total number of residential units. So the reason we need that information is because the commercial side of things is rated on square footage, while the residential side of things is rated on the number of units. So I have to have that breakdown when it comes to rating for the GL, because that's the information that the carrier needs to be able to quote that. And again, talking about why giving the year built and the construction type and the updates is important, because that does dictate the type of coverage I'm able to offer you, whether it's special form replacement costs, basic ACV, that goes into it, as well as, my markets that are available. Because as we know, the older buildings, some people are no longer wanting to write. All right. So what I need to get a quote for you guys to get a quote, what I need from you. I need an Accord 125, 126, and 140. Again, including that square footage, the annual rents, the types of tenants in the building. We need all of that information to determine what markets we can go to. A supplemental. I don't always need an LRO supplemental. If there is any sort of restaurant tenant in the building, I will generally ask for one because we do want to make sure that that restaurant tenant has the appropriate measures in place. Other ones, it depends on the risk, but if you have one completed, that's great. I can definitely use that and work off of it. We can work off of most carriers' applications. So if you have another supplemental completed from somebody else, can definitely work on that. Otherwise, we have a copy of our LRO supplemental on our website at cidinsurance.com. Having a rent roll or a tenant list, again, if you broke it down in your email for me, if it's listed on the Accords, or you have the actual rent roll itself that lists all the tenants out, the square footage occupied, generally that will have their rent on there, their lease term. So, that's helpful. Certain carriers will specifically ask for a rent roll and won't necessarily accept just like an emailed list. If that was the case, I would let you know. But as long as I have that information, it will help me because obviously tenants are also a factor in determining what markets we can go to. As we just talked about, a statement of values, if it's applicable and needed, definitely want to send that over. I'll ask you for information if I need a further breakdown. And then 3 to 5 years loss history. We can do new purchases or new ventures for people who've never had coverage before. That is not an issue. But if they have had loss history, we would like to see that. I can quote subject to clean loss history. So if you don't have the loss runs at the time you send the submission over, not a problem. If they do have losses, I will need the loss runs because I will most likely have to submit that to the carrier for approval. In addition to that, on the loss run side of things, if you have losses and you've worked with me before, you'll definitely have seen my question that I have memorized. I'll ask you, to provide details about the loss, what happened, if there were any damages, if those have been repaired. If not, let me know where they're at with the repairs and what they're still needing to do, and then what actions they took to try to prevent that from happening again. Certain things, are out of your control and you can't really implement anything, but, there are certain things, if there's common frequent water damage losses because there's, a backup of sewage, things can be implemented to try and lessen that frequency from happening again. And then other instances, you don't really have something, you can't necessarily help that, somebody plowed into your building and you already had a barrier in between your building and the sidewalk, and they still managed to go through that. You had already taken steps to do that. So, depending on the situation of what the claim occurred, we'll want to know that information because that will help determine with the carriers. And, the more information I have, the more I can try and sell it to the carriers and kind of be like, well, it wasn't really their fault. So we can try to get that for you guys. And then if you have a target premium as well, I know it's really hard right now with target premiums because of the market and people getting non-renewed, so they expect the premium to go up. And then even, on accounts that are getting offered renewal terms, you're seeing anywhere from 25% to 100% increases on some of them. So I know target premiums are kind of hard to gauge right now, but, if I have that information or, let me know like, hey, I have a quote already on the table for this much, it helps me with where I know I can go to and what information, if something I would be able to be competitive on for you. All right. Just a few other things that we were talking about again. So wanting to make sure what tenants are occupying the building. That's why that's information about providing that is important to me, as well if there's any vacancies. Again, I will Google map the properties. So if I see things, for lease, obviously I look at when the Google image was last taken. Sometimes, they're a few years old. So I always just double check, and you can tell or things like that if you're on Google and it shows the business is closed, to just ask to see if there are any vacancies or they recently swapped out tenants, no problem. Having those annual rents is really important again, so I can offer business income. Even if we were offering business income and you were looking for on an ALS basis, we would want that on. We would still need that figure because we need to be able to provide the carrier with that annual rents figure. The type of plumbing, like I was talking about earlier, if it's galvanized, PVC, copper, PXP, those types, knowing that type will help me determine what markets I can go to because some carriers have limitations when it comes to that, or what coverages I can offer. One other question you'll probably get from me a lot is, especially on those older buildings, is the type of electrical panels there are and what type of wiring there is. Because if there's aluminum wiring, knob and tube wiring, that would be prohibited with us because those types of wiring, unfortunately, do not qualify with any of our markets. And the same thing on the electrical panel side of things. If there's Zensko panels, Federal Pacific, Murray panels, we have one carrier that will consider the Federal Pacific and Zensko panels. Otherwise, if that risk doesn't qualify with that carrier, we are not a market if those types of panels are present. Once the panels have been fully replaced, we could definitely look at reconsidering the risk, but it's not something we would want to be on if we knew about it from the get-go. Obviously, we know we find out about a lot of these on the electrical panel side of things on inspections. So depending on the carrier, they might get off the risk right away because, like I said, it is prohibitive for them. Other ones may, allow them some time if if the insured shows they're willing to replace the panels. I know it can be a very expensive project, so not everybody wants to do it. So then it would just come down to, finding another market that would be able to consider them with those panels. And then one last thing that I get a lot of things on where I have to go back to people on is determining the building limit. A lot of people ask me how to calculate the limit. So one way to start, I would say, if it's a new account for you, wasn't one you controlled before, take a look at their current coverage. What limit are they? What limit do they currently have? And then just do some math to figure out what the cost per square footage. A lot of people are thinking the cost per square footage on buildings is too low right now. So when I get a submission, and that's one of the first things I do is I look at the building limit, divide it by the total square footage of the building to figure out what the cost per square foot is. I can see anywhere from $100 a square foot to $300 a square foot or more. Generally, when we get over that $250 mark, I will most likely ask you for a building valuation to confirm the requested building limit. Recently, I've gotten some that as high as $1,000 a square foot a building, and unfortunately, that's not something my carriers are going to offer. So we would want that building valuation report or replacement cost estimator to show what is determined to be the true replacement cost, so we can offer a limit that's more in line with that than offering $1,000 a square foot limit, because that's not something my markets are going to go for. And again, don't base your limit off of market value. We want this based off of what it would cost to replace the building. All right. All right, and that's all I have for you guys today. If you have any other questions, feel free to post them in the chat. We can definitely get them answered, even if it's after the webinar. My contact information is on the screen as well, and you can submit your applications to our submissions email at cidinsurance.com. If you're not sure about a risk or who writes what, you can always send it to that email, and it will get facilitated over to the correct underwriter. So again, we have a survey after we're completed, so if you guys could give us some feedback, that'd be great. But we appreciate you guys joining us today, and we'll look forward to doing business with you.